Hey traders, happy holiday edition of the Weekly Outlook. This is Chris Pulver here for the week of December 23rd through the 27th. It is Christmas Eve and happy holidays to everybody. So I wanted to take a moment and say thank you to each and every one of you that subscribe to my YouTube channel or follow me on Twitter and Instagram or find me on Facebook, write me messages, and always keep me working hard to stay objective and find the next big trade opportunity. So a big thank you to each and every one of you out there. Just a quick year in review. Things have been going extremely well. Let's take a look at the chart and what I mean by that. If you're trying to follow me out there in social media, here's how you can follow me, pass along the message. Find me on Instagram at pulver.chris, Twitter at pulverchris, Facebook, just look up my name, and same thing with YouTube. You can just type in my name and find some videos, playlists, and again, messages are welcome, feedback is welcome. All things good. So let's take a look at a couple of things. This was what I found interesting for the year in review. The S&P 500 is up 28.6%. 28.6% from where we started the year. Now that's after a quick jump starting December 26th of 2018 when we had a sharp bottom in the market, and it has been a melt up literally all year. I mean, we had this dip up above in positive territory. We had some pullbacks. We got up to around 17%, pulled back around 6%, got up to around 20%, pulled back and stayed. You can see some indecision there from 20 down to 13.5. I mean, every pullback we've had have been single digits. And if you're just thinking of this from a wave perspective, look at this. This is interesting. 1, 2, 3, 4, 5. This is a fairly long stretch. We're up another, 10, 11% just in the last quarter. As we approach the year end, very few things have derailed the market. Clearly, nothing has derailed the market. Just to put this in perspective, 28.6% year to date on the S&P 500. The average hedge fund return, according to the Barclay Hedge Fund Index, is still single digits. So how do you go almost 30% in the S&P 500 and have your average fund return 8.8%. Now, I want to put this in perspective compared to last year. If we take a look at last year's high before everything crumbled when the Fed had the dovish rate hike and the market did not like that, did not take kindly to that, and the market dropped a quick 19.7%. Now, from these highs in 2018 to current highs, we're actually only up about 9.5%. So to put it in perspective, basically, the buy and hold is where you're getting your information for most of your hedge funds. Buy and hold. There's your 9% return. So because the performance has been so amazing on the S&P 500 and the stock markets in general with new historical highs and pushing into the end of the year like this, Santa Claus rally is alive and well. But from last year's high to this year's high, 9.5%. But you look at it from start to finish, this is why you have to understand where to find some dips. Buying the dip last year, you're up 30%, 28.6% just on the S&P 500. Major index play right there. Now, is it going to stay like this? Probably not. Okay? In fact, this is on my charts here. I mean, take a look. I intentionally put this note right here because there is a lot more politics and a lot more influence with news than ever before. And it's almost as if you can't have any real movement in the market, any sustained movement in the market without some type of reason why. So this was a tweet. This was 9 a.m. I was running a trading room at this time. This was a tweet from President Trump, December 12th at 9 a.m. We're so close to a deal. China wants it, U.S. wants it. And what happened? That was one of the biggest jumps we have seen in weeks. Right there, that bullish candle. Now, again, I'm going to put this in perspective. This is about as clear as it gets. Highs in the stock market, disagreeing with price. Overbought conditions. This does not mean I want to short the stock market. This does not mean that I'm looking to sell. This does mean that if I am protecting profits, I would be looking to move stop losses pretty tight. Okay? This means that if you're trading any type of stocks that have hit new highs, I would probably protect some profits. Because I think as we start 2020, we do have a phase 1 deal from US and China. Nothing is written down, nothing is officially signed, but that is coming in January, so they say. But what if it doesn't? This will be a technical correction to the downside. Now, there is still an incredible amount of support, and with everything from central bank support to corporate earnings to everything being somewhat still optimistic, expect this level like here and here and here and now here. Expect these levels to hold technically. We might end up having what I thought was going to be a rising wedge now that structure's been broken. So we might end up going something like this. We might connect the channels from low to high, and we might have a little pullback, another 6 to 7% dip perhaps, and then they buy the dip. And this continues to go and go and go until the 2020 election, or close after that, or going into 2021. Right? We may end up getting so overextended that if this continues to go strong through January, again, it's going to correct. This is a broken market if it doesn't correct. Now understand that the market can stay irrational longer than traders can stay solvent. I've heard the saying, it's true. This is borderline irrational. Technically speaking, we are starting to really disobey what the market really sets up from a technical standpoint. Overbought conditions and very noticeable divergence on a higher time frame. I just believe from a technical standpoint we are due for a correction. All right, but enjoy the profits. It's been a great year. One thing I'm really looking forward to in 2020 is more volatility. I do think that the dollar is going to be a big mover. Here's the DXY. Okay, I still think that this is a beautiful bearish pattern that we're running into some massive resistance, whether it's now or later. You know, we might have one more pullback here, and I'll go into the pattern in just a second, but I see this as a really nice head and shoulders pattern, and we're pulling back to a double top at the right shoulder. If it happens to come back up towards previous highs, or even this level, around 100, I would still look to sell the dollar. All right, and even if we stay range bound, I mean, there's all sorts of ways I'm preparing, but they all point to the same direction, which is trying to establish a position on dollar weakness. All right, so whether this is coming back up for an equal high to sell off to this year's pivot, or this comes back up to double tops or resistance where we had highs back in 2015 and 16 versus a brief high that we broke, and obviously that was a fake out, but that established the high to low swing. I'm looking for this to be matched to the downside. Now that might be wishful thinking because it might be longer. It might be more consolidation from this range. Maybe we double that. Maybe we have this range over here where we just end up coming back down, more consolidation, and then fall down to these lows. But I think 100 is huge resistance. We're currently trading just below 98. 93 is a fairly conservative measure with a yearly pivot right there from 2019. So I am looking to short the dollar. I am currently long Aussie dollar. I am currently long New Zealand dollar. I am looking to get long on euro dollar. When I go into the charts, I'll show you that. Those are the three currency pairs I'm focused on the most to take advantage of dollar weakness. I've been debating with this all week. As I see the markets running, I see the stock market churning higher. I have a lot of currency pairs that I'm doing quite well in. I am in on Aussie CAD, Aussie Swiss, Aussie Singapore dollar, Aussie US dollar, New Zealand CAD, New Zealand Swiss, New Zealand US dollar. I'm in those positions. I'm currently in Aussie New Zealand as well. I'm holding Euro Aussie that's kicking really nicely. Euro Aussie is down to 1.60. Go to my watch list here. Euro Aussie, where are you at? Right there, 1.60. This is up about 300 pips. You know, I'm just going to continue to run. Now, this might be a position that I want to take some profit off. But again, I'm looking at something. Take a look at this currency. This is the AXY, or the Aussie Currency Index right here. And take a look at this on a daily chart. Is this not a great opportunity to see some lows holding and some lows holding and have this thing pull back a little bit, even if it's a pullback? You know, even if this is, the trend line break is so clean. Whether we go to the steeper trend line, we're on the right-hand side of it. If we go to the more, automated trend line, we're still sitting right here on the cusp of getting on the right side of this trend line to break and go bullish. So I do think holding Aussie looks fantastic, and I'm going to continue to hold for Aussie strength. The ZXY is the New Zealand dollar index. And the same thing, we have equal lows from actually 2015, equal lows. Can we come back and create a reversal pattern? If we go from this low to this high, how nice would that be for a range-bound trade where we continue to see New Zealand dollar strength? So on those commodity-based pairs, I am looking to be long and stay with that. I hope that this will be a very straightforward trade. I've been very patient waiting for all these to play out, but I'm looking to stay long with Aussie strength and New Zealand strength. So I have been torn because I'm sitting up, some profits, and it's tempting to take it and close it up and say, okay, I'm going to add another couple percent to my bottom line for the end of the year. But the reality is, if I close out some of these positions, of course I can always get back in, but I've literally built my positions off the lows. So for me to let go, I'm taking little hits on financing charges. I'm getting charged anywhere from, 10 to 20 bucks a day. And yeah, it sucks to watch that, okay, I'm up here and then a week later I'm down $100. But I also know what I'm sitting on for bigger profits, and it's, believe me, I'll pay $100 to make $3,000 or $4,000. But it's cost of doing business. It's just annoying that I want this thing to start moving because I have been so patient waiting to get in. But now that I'm in, I don't want to let go. I would be doing myself a disservice by bailing on good positions and good low positions that I've bought and bailing too early. So I'm going to ride this out through the rest of next week. I think that if we continue to have this drift through the new year, granted it's holiday trading, the market's already established some trends and breakouts, and I'm just going to go with it. Very limited market movement today. If I go back into my currency strength chart, for example, 20 to the upside and downside, very limited movement overall. There may be some surprises through the end of the year. Christmas Day, the 25th of December, usually most markets are closed. U.S. markets are closed. Very little, if any, significant movement as we potentially kick into New Year's Eve, New Year's Day. Same thing, limited volume, holiday trading. Perhaps a surprise flash crash, but I doubt it. I could see something happening on maybe the dollar, maybe the pound, but something low volume, low liquidity. But usually what's already established as we get to the end of the year just stays the course. So I would expect the subtle breakouts and trends and possibly even ranges to continue. Let's just go ahead and get into the charts and I'll show you. So we took a look at the dollar index. Let me go to Aussie CAD. This is the Aussie CAD, and this is the position that I have been waiting for. I bought in at equal lows. I started to buy in again at equal lows. I bought in at equal lows. Left shoulder, head to neckline. Let's go, Aussie CAD. If we break above, we should be getting back to 9,300. My base position is right around 9,000. I am going to hang on to this trade. Now, of course, it could still be range bound. We have resistance there. We have support here. This could be range bound. All right, but if this breaks, this is the pattern. This is where we should be going. So this is the type of move where during the holidays when nobody's watching, when there's low volume, nothing to fight this, perhaps it starts to break and then we kick off with a little bit more volatility and we get a run to the upside. This also might be played off of oil. I've been watching oil very carefully. We're sitting just around $61. We have gone from 51 all the way to 61 in a very slow, methodical way. I still think oil either at this high is coming back down or at this, high when we had the Saudi drone strike or these highs back in the early part of the year in 2000, and this is actually May 2019, that's around $65. But I do think oil is due for some pretty heavy selling, again, just from a technical standpoint. So if the oil slide happens, the CAD will get much weaker and that Aussie CAD will be a great trade. Aussie Swiss, another one, patiently waiting. This one might be sideways with some levels here that I'm buying. I'm also looking at this level at 66.50 to add positions and this bottom at 65.50 to add positions. I'm trying to take this all the way back up here to around 7,000. That is my profit target. This is one where if it continues to drift higher and higher, hopefully that low volume breakout allows it to get to the outer trend line and we start looking at profits around 7,000. If it takes longer than that, then I will just patiently wait and I will buy it lower and just keep leveling myself into this trade for a bigger profit. Aussie yen and yen pairs in general, if the stock market continues to drift higher, expect the yen pairs to stay weaker. So Aussie yen will be bullish. We should be looking to score some points back up towards these previous highs, which were just shy of that. We also have this nice little pocket and price gap from May of this year, and we have a ton of previous support becoming future resistance around 77.50, just shy of 7,800. So I do think this is a fifth wave move, and it will be probably low and slow and steady. But once we start getting above 76, maybe drifting towards 77, if you're in this trade at all, move some stops and trap some profits. That's Aussie yen. Aussie New Zealand's. This one, again, biding my time. I've already started to level myself into trades here between 106 105.50, 10500, 104.50, 10400, 103. I'm in the trade. All right. I like where this is at. This is my minimum target to get back to around 10700. Now, this may end up forming some lows here and we go up to this level early on. This also may drift down to these equal lows around 1.0250. And that's fine because I'll look to buy it there, see a reversal pattern, start to get on the train to the upside. Minimum target for profits around 10700. I also think that if you connect these highs, we can go higher than 107. This is where I definitely want to make sure I protect some profit but we can continue to run towards 109. And if I can build a nice base position here, this is going to be a fantastic trade to the upside. Aussie dollar, another one that I am in, I am profitable on, and I'm wanting to hold. Look at the Aussie dollar. We are on the right side of the trend line. We are up above, or right at, those previous highs. Come on. Left tip, center tip, right tip. Depending on what the dollar index does. Now, granted, the euro dollar, dollar Swiss are much tighter correlated to the dollar index. But if this low volume breakout continues and persists, this will go bullish. We have room back to this high. We have room to a round number like 7,000. We are on the right side of a trend line. Come on, Aussie dollar. Let's go. This is why I'm not bailing. I've worked too hard and waited too long to buy low to say, okay, I'm just going to take a few dollars here and protect it for the end of the year. Look, just go. I'll hold it. I'll pay the cost on the rollovers. I'll pay the swap, right? But make me my money, you currency pair, you. CAD Swiss. If I can type it in correctly. CAD Swiss. Let it do whatever it needs to do. If it needs to range, so be it. Maybe we establish a channel this way off of these lows, and I want this thing to drop as low as it possibly can. You know, drop to these previous lows, drop to these previous lows, drop to this previous low. I'm sitting with buy trades at 73, 72, and 71. And I'm going to range bound trade this all the way back up towards 76. That is the plan on CAD Swiss. CAD Yen, just like the Aussie Yen, stay bullish on it. Again, fifth wave move to the upside. We should be creeping back up towards 1, 2, 3, 4. We just stopped at those highs. We should be able to hold the trend line support and possibly drift back up to equal highs or previous high to start the year. This is back in February, March of 2019. CAD Yen, let's go Swiss Yen. This one had a surprising upbeat move, but we have heavy resistance around 112. Interesting daily candle. This actually we talked about in my trading room before we took a break last week. We're on the right side of the trend line. Okay, so this could just be right side of the trend line. There's your break, retest, falling. If this comes back up for a double top, that's a great opportunity to short, very little risk on the table, and take this back down to where it started, probably around 110.50. So very little risk, high reward. You can see that setup. I would say that's very favorable if you're interested. You know, it's a kind of a difficult pair at times because it's safe haven versus safe haven. But all in all, the Swiss in general is due for some weakness. And here's an example of that. The Euro Swiss is down to fresh lows around 108.60. Here is the daily chart. We have broken out of this corrective channel. We might end up falling down to fill this French election gap back in 2017 around 1.07. I'm going to buy it low. I'm going to buy it low. I'm going to buy it low. I'm looking for this. If it comes down to this area, 107 to 106 is a massive level that I would definitely buy from. If it comes down to retest this trend line, I'd love to see a bounce off this trend line and then a big reversal pattern to take it back up towards 114, 115, levels like that. Now, obviously, I would be sitting on this trade. I am long in these areas. I'm long here. I'm long here. I actually started to buy early on when this was falling originally. I'm prepared to take it lower. I will buy it at equal lows. I will buy it again at 107 and 106 if needed. From there, looking for a big swing in favor of Swiss weakness. I think across the board, technically that makes good sense. So I'm going to stay with this, building small positions and getting ready for a big monster trade on the Euro Swiss. Okay, I'm trying to think. Let me go back here. So we did Swiss Yen, Euro, Aussie. This has been a great trade to the downside. Just playing the ranges. I did not get filled at 63.65. Instead, I got filled at 62.50. So I am in at 6250. That trade is up about 250 pips. It could and should, excuse me, go a little bit lower towards 1.60. It's at this right now. This is probably not a bad trade to take some profit. And the reason I say that is we might end up jumping back up here again and have more range-bound trading where we can certainly sell it higher. Now, this is totally up to you, because if this ends up breaking below, firmly below 6,000, this should continue. Left shoulder, head to neckline. Necklines get noisy. Necklines get noisy, but if we break and we push, look at this break. Breaking this neckline should be trend to the downside. And we're talking about a couple of levels, even from symmetry, which is something I like to measure with these big swing trades. Something like this. From, I'll go conservative, high to low, lower high to lower low. That puts us right around 157. In fact, I measured out my trading room. It's like 15660. And if we go 1, 2 on the pullback, 3 to symmetry, 4 on a pullback, and 5 to symmetry, that puts us around 152. So to complete this move, we should be going down to this low or lower around 152. So there is a lot of downside potential here. And the truth is, if this pulls back, I'm still going to look to sell it. I will be disappointed, of course, if I'm losing 250 pips of profit, that I could just take profit now and get a re-entry, but there's no guarantee we're going to get a pullback. This might be the perfect time of year to keep drifting and drifting and drifting, and we start out 2020 down here. Now what do? You just look to actively sell it, because that should be the continuation of the bigger pattern. Again, holiday times, this market likes to move when nobody is watching. All right? Well, I am watching. All of you are watching, so let's take advantage of it. EuroCAD. EuroCAD, very range bound. I'm going to buy it low or sell it high. That's it for now. Euro Swiss, we already did. Pound pairs, I'm not even interested in the pound pairs. We made some nice pips during the UK election. Short-term trading, grabbed a couple hundred pips. Traders reported anywhere from 200 pips for the sessions to, we had a trader that was over 1,000 pips for the week, just killing those pound pairs. I'll come back and reestablish, some type of precedence or bias on the pounds in 2020. We'll see what the European Union has up its sleeve for the UK once they start talking about trade terms and a potential, deadline. If there really is a hard deadline in January, it'll be interesting to see what price ends up doing. So I will watch the pounds, but I'm going to favor short-term trading for now. Euro Yen, expect this trend line to continue to hold and push higher. Euro New Zealand, this is falling nicely all the way down to a couple levels that I'd be watching closely. We might end up pushing low enough where this is a high-low. Even though we had indecision in this range, this could be high-low, lower high to lower low. We can measure that move out and push this down into the 6,000 area. So it has been a sell trade since we had actually ended up selling this in our trading room around 7,500. So between 75, 74, 73, breaking these lows, starting to push nicely down to 67, ride these profits. If it's going to show a little bit of support, maybe right there is due for a bounce. If you're in off of these highs, do yourself a favor and trap some profit. If it goes a little bit lower, just ride it out with a trailing stop. Hopefully it's enough to stay out of the way. Give it maybe a daily trading range or so, give it 100 pips of breathing room, and see if it continues to push lower. Euro dollar. Euro dollar. This is going to be a big trade in 2020. I don't know how long this is going to take. I don't really care. It could be 110. Let me draw a straight line. This could be 110 support, where we bounce from there and have to break 112. This could come all the way back down to the lows at 109. This can come back down to lows at 108. I really don't care what this does, but I am interested with dollar weakness to buy it. 110, 109, 108. I should have stuck with my straight line. 110, 109, 108. I will buy these levels. If I get filled on all three of these and it goes back up to range highs, I'm still in profit. If it breaks above 112 and we have a daily or weekly close above 112, this is going quickly. And this is going to go probably to, I would say conservatively, around 1,600. I would love to get this back up towards 17 to 1,800. There is a yearly pivot on here as well. So there's a lot of upside. And if I can establish a position low enough, this is going to be an excellent trade with dollar index going the way that we think it's going to go, which is bearish. Okay, pound pairs, short-term trading only. We had that big top up in the UK election and dropping. It's been steadily dropping since. Probably going to drift a little bit lower with some pound weakness. Okay, same thing. So I would stay out of these for right now. If they give us a clean trade, I'm not going to do anything for the rest of the year. But this high-low, if we have a little correction, we might look at this as an opportunity to sell early in 2020. However, one thing I'm watching very carefully, two currency pairs that I'm particularly interested in for some positions to the upside. One is the pound Swiss. Look at this Fibonacci opportunity from this low to high. I'm looking to buy this right in here. Between the 5.0 and the 7.86, I would gladly start looking at small positions to buy with equal lows as a massive support. Now, it could be range bound, but if we have 618, 786, if we're going to swing, we're coming all the way back up to, this is actually post-Brexit breakouts and this high. This gives us a ton of resistance to get to. Okay, so I am interested in the bigger play. And again, fundamentally, Brexit's going to have more clarity. There might have to be some, uplifting comments on optimism coming into the UK. Fundamentally, the UK has actually been pretty decent. If the Bank of England can get some of this optimism to sink in, they might start raising rates. You never know. But still, technically, we are at historical lows. This is the 2016 flash crash, sitting right there again from this year, testing those lows, and a huge recovery. I love the idea of getting some nice positions to buy. So I'm looking and watching closely to establish some bottoms, establish a higher low, and try to get this to retest the high. That should be a nice swing in and of itself. That could be 2,500 to 3,400. That's a 900 pip swing right there, and we're not even pushing higher. So I think there's a lot of opportunity on a pair like the pound Swiss and a lot of opportunity on the pound dollar. Pound dollar, very similar. Take a look at this trend line. Look for this to pull back to the backside of it. You might not be planning like this, okay? But again, massive support at 1.20. Look at the crown pattern that has now emerged. Left tip, center tip, right there. If we pull back into this area looking for higher lows to bounce off the backside of the trend line, push higher. If we just push back to equal highs, that's still a lot of profit opportunity from, let's just guesstimate 2,600 to the highs around 3,400. That's still a great swing. If we come back up into these areas, there's lots of inefficiencies to come back and find around 1.40. So that would be a lot of fun on pound Swiss and pound dollar. Big opportunity to look for higher lows and get a push back up to these levels. Fundamentally, things are going to have to align for the pound to get that much stronger, but I think that it is one of the best baskets to trade. Even through this year, it was a great basket to trade. New Zealand CAD. New Zealand CAD continues to plug away. I have trend line support. I'm just going to go ahead and copy and paste this line, and there is a channel right there. So I am long and holding long, looking to stay with this trade towards 8,900 to 9,000. From there, look for resistance. All right. Even if, and again, if this is the New Zealand CAD, if CAD gets really weak and this thing comes all the way back up here, that's fine. Guess what? I'll sell it. This is near 20-year highs on this currency pair. So I have no reservations about, either selling it around 9,000 back down to channel lows or holding that trade. If it goes higher, I'll sell it here, I'll sell it here, I'll sell it here, I'll sell it here. And I'll look at these levels to hold. The RBNZ will do some great work talking the Kiwi down if it gets too strong. New Zealand Swiss. Another one, just a simple trend line break off of really nice lows, breaking the trend line and breaking higher. If you were watching for the last couple of months, you saw my weekly outlooks have this range. It was in a yellow box. I was joking that we just needed to take off the box and get this to go higher. It finally did break higher in December. December 2nd, we finally end up pushing stronger, and it's staying that way. Go to the outer trend line. We should be able to score a point here at that high around 66.50. New Zealand yen continues to push higher as well. This will be interesting to see if we score a point for those bulls. Is this actually a reversal pattern? Quite possibly it is. We've been in a downtrend for a while. This could be, again, look at it from that perspective. This could be coming back up to range levels and not really be a reversal pattern. We could just have a big range where we come back up here, hit resistance, and then we stay range bound, and we have this resistance holding, and it pushes itself back down. We'll have to see how price reacts to this. If the stock market obviously stays bullish and continues to run, it'll be a hard time stopping a pair like this from going any higher. There is a price gap that I've mentioned for several weeks now at 73.50. Price could very much be on its way to get that level. That was a gap back in May of 2019. New Zealand dollar, another one that I am long on and holding, and go baby go. This could be a great range trade. And I don't think this is done. I mean, I think this hopefully offers a pullback. If we have these lows, let's see if we can get something like this. If we can score this point and get up above this high and then pull back, I'd still like to buy that trade. Otherwise, if it's pulling back more abbreviated a little bit sooner, maybe we have a reversal pattern here, and we look to establish another right shoulder and go longer. But we already talked about the head and shoulders down here. It might be subtle, but there's your head and shoulders pattern. And that breakout should push us up into this previous high right around 6,800. Okay, we also have previous highs here around 7,000. We have previous highs way up here around 74. I really think that the New Zealand dollar can get to 74. If we stretch this high to 74, we will most likely have a huge opportunity to short back down. The RBNZ is notorious at jawboning their currency pair. Anytime that they are hanging around 7,000, they're pretty tight-lipped. Anytime that they're higher than that, like 74, 75, 76, they start to talk it down. So I really think this has good opportunity and good legs to continue to go up. I would like to see a pullback first so I can re-enter and add more positions and then go longer and then drifting up towards 73 or 74, protecting profit, then looking to build a sell position back down. So this could be a great range trade to look forward to over the next maybe 3 to 6 months. Dollar CAD, lots of support resistance, 3,000 support, 33.50 resistance. Let's see what happens. I'm just going to clone this line. Resistance there, support there. Play the range. Oil's also in a range. See the correlation? Dollar Swiss. Dollar Swiss, if it needs to drop, bring it on. It can drop down to all these previous levels, and that is fine by me. If it drops to there, drops back down to these levels, that's fine. I'm still a buyer in this currency pair just for the sake of rollover. I'll buy it low, expect Swiss franc weakness. I'll buy it low, expect Swiss franc weakness. I'll buy it low, expect Swiss franc weakness. All right, I'm just going to hold long on dollar Swiss. I hate selling this currency pair. It's expensive. You know, even with the Fed right now at 1.75, which is their benchmark, that's the upper threshold of the benchmark, the Swiss is negative 0.75. That's one of the biggest differentials in swap that the market offers. So that alone for me is an incentive to hold long. Now, granted, I might be in early. You know, I bought it right around here, around 9,800. Okay, I'm in early. I get it. But if I buy it at 98, and again at 97, and again at 96, and again at 95, and 4, and 3, that's fine. I'll take some positive rollover. My position gets slightly bigger, and then I find a way to balance it. I might take a loss on 1 or 2 positions and then close up for a group win that offers me positive rollover, positive swap, and net profits. And that would make me smile. Dollar yen should be going higher. I have really expected this one to just kind of oscillate, which it is. We are making higher highs and higher lows. This will probably continue through the holidays. But expect this to find a way to keep drifting higher. I really think that we're going to have higher highs and higher lows on this dollar yen as we maybe have a slight oscillation to the downside. Expect this to go higher. So a little bit of a channel going on. Look left and find some nice levels. Previous levels, gap right here, previous levels. Just see how low and slow this wants to go, but I do expect it to go up. All right, and some other pairs that I've talked about in the trading room, dollar peso, for example. Coming back down to channel supports, I'll watch this one. I'm not going to trade it right now at the end of the year. Dollar krone. We've already started to make a pretty firm move back to this trend line. Let's see what happens. I would like to see, if I'm going to be a big seller here, I almost need to see this continuation take out these lows. We did have a range right here that we broke to the upside. If we end up breaking this trend line and coming back down, well, then we can talk about selling the backside of the trend line. Otherwise, if this simply hits the trend line support and jumps up, this is still in an uptrend and this is still in a bullish channel. So we'll see what happens in 2020 with this krone. Same thing on euro krone. Euro krone here, big drop, but again, channel support is holding it. We did just poke above these highs. I should have just sold the darn thing. If you go back to a monthly chart, this black line was a historical high. If I was hanging on to that around 10.10, I'd be up about 1,200 pips. Probably just come back to trendline support. That's about it. That's it. I'm going to go and wrap it up there. It is, it's that time of year. It's December 24th. Happy holidays. Safe trading. A big thank you to everybody that's been following me out there, leaving me comments, leave me likes, subscribe to my YouTube channel, get the notifications. One thing that I want to say that will be coming soon. I'm going to be putting together a video series. Look for that on my YouTube channel. This has been a long time coming. My trading room has grown a ton. I'm over 1,500 students in my trading room, over 1,000 subscribers on YouTube. It's been a lot of fun, and I look to continue to see that grow. So I want to keep providing some great content. So look for that video series to come over the next couple of weeks to kick off 2020 with a great head start. And the video series will help many of my followers out there to establish a nice solid foundation. So weekly outlooks like this and application videos that we talk about and find direction, you know what we're talking about. It really is simple. We buy low, we sell high. We try to let our profits run. We try to keep our risk under control. That is trading. It's not glamorous. It's not sexy. It's not fun. But when you do it consistently and you make profits and you beat the market or beat the hedge fund index, then you're doing your job. Move the needle, make your profits, protect your profits. All right, everybody. Happy holidays. Talk to you soon. Thanks. Bye.